So what we're going to do first is talk about my Monday trade. This was a D1 entry on GBP NZD. We're then going to transition into another D1 entry yesterday on GBP CAD. Both of them are short trades because we've seen a lot of bearish movement across many GBP pairs, basically over the last week and a half, 2 weeks. GBP CHF, GBP USD, including these two pairs, GBP NZD and GBP CAD, all of them have seen majority of their movement over the last week or so to be bearish to the downside. So that kind of fed the ideas going into the week this morning that we were short biased the GBP pairs. The first markup that I'm going to show you, now these are photos of the trades, these aren't live charts. These are just my markups. So you're going to get all the details as if you were a member of ASFX. The members in ASFX get access to all of my markups, not only just because they know the system, but because I share it in our Discord chat. People ask me all the time, how do I get into the Discord chat? The only people that get into the Discord chat take the beginner and the advanced course. That's what really makes ASFX unique. And we had our live seminar in Tampa last Friday, and we kind of talked about this at the dinner for the VIP people there. And they were all saying how it's so unique that we only let people into the group chat that speak the ASFX language. And that's why our group chat is 1,500 members, 1,500 active traders that don't argue with each other, that don't interfere with each other's trading. In fact, Quentin said this on our call last night, when he sees an idea on his own and he can come into the group chat because we all speak the same language and then see that I'm also looking at that idea, it's more of a confirmation for him. And that helps build his confidence in his own trading. And that's our mission at ASFX, to build self-sufficient traders. So that's why I'm showing you these markups. These are the markups that I share with the members because I want them to build that confidence as we go forward. So GBP NZD to start, you can see this is a lower probability setup. I graded it a C setup, but in reality, the structure, you could get away with calling this a B setup overall. Now, as you can see, the trade falls about 74 pips overall. You can see the profit right here next to my head. That happens as it comes down here towards the end of the day right here. I was out of the trade full out here at about 5R. You can see at most it falls 5.4R. And it's a very pain-free trade, as you can see. It just holds the 8 EMA through the 80R level all the way down, like I said, to about 5R right here. So to start the day, market sentiment is in the buy zone, as you can see. That market sentiment swaps into the sell zone pretty quickly to start the day. And from that point on, the market sentiment, the yellow line here, holds the sell zone, feeding the short bias. Now, price action confirms that direction as it's making lower highs in the Asian session and lower lows into the London session. So as we were holding the 21 EMA, I was anticipating that this would hold the 21 and 8 EMA, hold the downshift that happens here at the start of the London session. It would hold the 8 under the 21 and at least go to the ADR level to the low of day. And that's where I took a nice chunk of the trade. About 50% of the trade came off there. But I didn't get in on the 15 minute. There was no A1 entry. So this is a D1 entry where we're using the 21 EMA on the 15 minute and the 50 EMA on the 15 minute here to give us that resistance level that we're trading down off of. And we're going to anticipate that since it broke the 800 EMA, which is this blue line right here, since it broke the 800 already today, this retest of the 800 is a great place to trade it down off of. So if we take a look at the 1 minute, you're going to see here's the divergence. Hold on. Here's the divergence back here at 5 o'clock into 5:30. RSI is falling. Price action is rising. That sets in the high. Now, it takes a while to give us an entry. I didn't start trading until about 6 on Monday. I slept in. I've been really starting my trading around 6 because I've been waking up around 5:30. I meditate, have my coffee, and do my thing. So I got to the desk around 6, and this was not ready because it's making higher lows on the 1 minute. But notice how this trend line is created right here. The trend line is tested here. But after it tests that trend line, it starts to make its third lower high. So this is the original divergence high. This is the new lower high. Both of these could technically be lower highs. Here again, a lower high. And then it breaks that trend line here. Now, this is where I took my entry. Was a little bit aggressive in the sense that I didn't wait for the break of the trend line. But I don't love diagonal lines anyway, so I'm not going to wait. Why I got in is the market sentiment line was in the sell zone, as you can see, and we were breaking through the 50 EMA, which is what we've tested for our D1 entry. That's what's back tested. That's what we should be trading because that's what's proven profitable. Now, if you read my notes, we could have waited for it to break this line and gotten in here as it comes through the 50. Market sentiment is still bearish here. Or we could have waited and taken this retest of the 50. Market sentiment is still bearish there as it's making lower highs and after it's broken the ascending trend line. But the ascending trend line isn't something that I always use. I'm really looking to get in as high as I can because I want a tight stop loss to this divergence high. The stop is going to go at this high right here. And that was the trade. As you can see from the entry, market sentiment holds the sell zone on the 1 minute beautifully here, right? 15-minute, candle by candle, bearish, holding the 8, holding the 8, bearish, holding the 8, bearish to ADR, holding the 8, bearish for a new low of day, continues to hold the 8 down to 5R. And I was piecing myself out of this trade as it fell. So that was the first trade of the week. Any questions on that, put them in the chat. I want to go over to GBP CAD now and show you this trade. Now, this is a beautiful trade, right? An all-day runner. It's lovely. You got to love that. Look at this on GBP CAD. This is yesterday. We see a big move down on GBP CAD overnight. The market sentiment line is perfectly bearish today, as you can see. The issues with this trade are that it's oversold. As you can see, it's very oversold today. And the EMAs could be better. The 200 EMA is above the 800 EMA. You see the white line behind my yellow text? That could be below the 800. And even here, to start the day, the 50 is above the 200. See the blue above the white back here? That could be better too. So those are the two knocks on this setup. But again, same idea. D1 off the 50 EMA, off the 21 EMA, as this would look to push towards the low a day. That was the idea. Now, because we graded this a B setup, once I was close to 1.5R, and you can see it falls about 1.5R, I took profit and I locked my stop. And I was stopped out of this trade within 30 minutes. You can see it falls for 30 minutes. In 45 minutes, I was stopped out. In the next 15-minute bar, it stops me. But from the entry, the next two candles stayed bearish, and that's how I was able to be profitable on this trade. So if we go to the 1 minute, you'll see the divergence is here at 5:30, very similar. RSI is falling, price action is rising, and there was actually another set of bearish divergence previous. So you had two sets of bearish divergence where the RSI was falling and price was rising here on the 1 minute at the significant level of the 15-minute 50. Once we had both sets, I said to myself, okay, this could come lower. Let's get some structure. Now we get a lower high right here. It drops. We're not going to just jump in right there because it's still in an upshift on the 15-minute. We get another lower high here. Then it starts to shift down, and I'm still not getting short there. That's going to be my stop loss as I get in here on the retests of those 50 EMA, of the 50 EMA. There's two little retests right there. Why is that the entry? Because that's when market sentiment gets into the sell zone right here. And as you can see, straight profit from about 7:39. So it's about 20 minutes of straight profit. And then it turns around very quickly and I was stopped out in profit. 1.5R, 50% of the trade was off, as you can see from my notes right there. 1.5R, 50% of the trade is off. So this was the trade on GBP CAD. Now again, just following my management rules with B setups, at 1.5R, stop loss is locked, 50% of the trade is off. No matter how beautiful it is, no matter how much I think it could fall. And with this trade, look at the 15-minute again. It made such a big move overnight, it almost maxed out its average daily range in the Asian session. It also was very oversold today. It's not like it just tapped the oversold. It was very oversold today. Almost, you would call that a double oversold. So you don't want to marry these ideas. You don't want to be greedy and try to think, oh, this is going to keep tanking. No. Take your entry, following your rules, mitigate your risk, move on to the next trade. Sometimes they're going to stop you out quickly like this one did. You're still going to make money. Sometimes they're going to run all day like this one did. And it's going to be a beautiful trade that you can hold into the afternoon with your stop loss still being moved. So once this moved to ADR, as you can see here, that was about 1.5 almost R. That's where my stop loss got locked. Once we got away from the entry, I knew that this ADR level could be where it stops because it bounced off that ADR line already. So it's low of day, it's ADR max. Naturally, I'm going to take profit there and mitigate my risk by locking my stop. This one just happened to hold the 8 EMA and continue. You can't forecast and know, oh, my trade on Monday is going to hold the 8 EMA. My trade on Tuesday is not going to hold the 8. It's going to turn around. I got to lock this one. You don't know which one is going. The outcome is unknown. You don't know what's going to happen after you take the trade. So mitigating the risk by moving the stop into profit as the trade develops and taking profit is the key. And the last thing I'll give you on this, when we're looking at trades like this, A setups, give them more time. If there's nothing wrong with the setup, if probabilities are highly in your favor, stay in the trade longer, take profit later, move your stop loss later. Versus a C setup like the GBP NZD trade with 3 knocks on it, take profit at 1R, lock your stop loss, and if it falls, great, you caught a great C setup. And if it doesn't, you're going to be really happy that you locked your stop loss because then it turns up against you or turns down against you. It turns against you and you get stopped in profit instead of taking a loss. So I know some people don't believe in the idea of risk mitigation. I don't think that they make money from their trading as consistently as I do. So I would challenge them very much on this. For me, I want to win consistently, mitigate my risk, and just move on to the next trade because I always know there's another trade coming. And that's the approach that's led me to consistency, and that's why I share it with you guys in that way.